Here's a business that doubled its revenue in a single year and almost went bankrupt doing it. Every month showed a profit, sales were climbing, and yet somehow the company almost ran out of money. How is that possible? The answer sits in one number investor's 𝗙cie𝗹𝗹𝗄𝗯, working capital. Working capital is the cash a business needs to keep operating while it waits. Technically, it's current assets minus current liabilities. However, the plain version is more useful. It's the money tied up between paying for something and getting paid for it. Profit is a claim on future cash, and working capital is the cash you need today. Those two are not the same thing, and the gap between them is where companies quietly break. Watch the timeline. A company buys raw materials in January, pays the supplier in March, sells the finished product in April, and then the customer pays in May. From March to May, the company is paid out cash and received nothing back, even though its income statement records a sale being earned. Now here's the part most people get wrong. Growth widens that gap. Bigger orders means buying more materials up front, paying sooner, and waiting longer to collect. A slow, stable business can sit comfortably on its profits, whereas a fast-growing business can be profitable on paper but still starve the cash. Therefore, growth on its own is not safety. Sometimes it's the opposite. So when you read a financial statement, where do you look? Two tells. If inventory is rising faster than revenue, cash is getting stuck on the shelf. If receivables are climbing while sales are flat, customers are slowing their payments. Profit tells you what was earned. Working capital tells you whether the business can survive long enough to collect it. That's the kind of thing I look for when I study a company, not the headline earning number, but what's happening underneath it. That business from the start that doubled its revenue nearly collapsed. Its profit was real, but its cash was trapped in inventory and unpaid invoices. So the next time you're a company celebrated for its growth, ask the quieter question: can the cash keep up with the ambition? If you want to see what else I'm finding as I study this, subscribe. The deeper I dig into these financial statements, the more there is to share.